Wala na music.
Good morning, good afternoon, and good evening. It's March 16, Thursday, 5:57 p.m. Welcome to the Mark Yu and Wawi Show. This is Mark Yu.
Wawi Santos present today.
Yeah, right. And then welcome to our latest episode 71. QE has restarted. What a claim, what a bold
Oh,
statement.
wow. That's a pretty bold statement there, Mark.
We gotta go with a bang. Well, before we jump on our weekly sentiments and fund flows assessment, for the YouTubers out there, we just have to be mindful that whatever we say or advertise or recommend as buying investment, um, you know, please take heed and always study where you put your money, because just right now I saw this news from Market Watch that people are suing YouTube financial influencers for class action lawsuit for pumping up FTX. Or
What?
for those who are not aware, these is a cryptocurrency that blew up. That I think it at one point was valued more than 20 billion, and now it's like not even a dime worth. So the YouTubers named in the suit are the well-known people. Names are Kevin Pathrath, or he's more known as Meet Kevin, Graham Stefan, Andre Jick,
Oh my.
Joshprit Singh, Brian Jung, Jeremy Lefebvre, I don't know how you say that name, Tom Nash, Ben Armstrong, and Erica Culbert. Oh, I haven't heard about Erica, this person.
Well, they're suing, but they can't deliver the what do you call this? The subpoena to one of the basketball players.
Mhm. Wow.
There's several basketball players too that are being sued.
Right.
Woo, on
Yep.
that FTX scandal.
You could tell that they have a large following, millions and millions of followers. For example, this lady that I haven't heard her name before this episode, before this article got published, has 1.2 million subscribers. So just to keep an eye out, and for those who are listening to us, newbies or new to investing, always make sure that you do your research before investing any of your hard-earned money in the stock market. Me and Maui are both physical therapists here in the USA, and we don't have what do you call those, financially registered
We're,
certificates.
yes, we're not financial advisors.
Mhm.
So everything here is mostly for our own entertainment
Yes,
and knowledge.
yes, and whatever we're buying or selling, it's always do your due diligence and don't consider this as an investment advice. All right, so on we go to our weekly sentiment. I'm gonna just turn on my dark reader here so we could see this better. So the American Association of Individual Investors, whether is it a bullish market, bearish, or neutral? So actually, as of yesterday, a lot of people are scared more than ever for the past since the start of the year. We're back to 19% in the teens, which we haven't seen since the start of the year. So most of the people got scared, I guess, because of the what's happening for the past, not even a week, for the past 6 days, where the United States has suffered or has lost at least 3 banks in total.
Yeah,
And
tell me about it. Yeah, the Silver Gate,
mhm,
Silicon Valley,
mhm,
and then
the Signature Bank,
Signature, all starting with letter S.
for some reason. So Silvergate is headquarters in California, and I think Signature as well. But for sure, Silver Bank is located there because it has its investors, big or deep pocketed investors there at the Silicon Valley. The big tech venture capitalists have their accounts. So what basically happened is the bank invested a lot of money in treasuries, which is supposedly um, healthy or safest amongst the publicly traded bonds. But the problem is they bought a long-term duration, which means that they have to wait for long, like 30 years, before they could liquidate it at par and still earn some interest. But the problem is Jerome Powell has been hiking rates, the Federal Reserve, and when the yields rise, the bond price falls, and they had to sell a bunch of them, making them realize at least 1 point or nearly $2 billion in losses. And this was announced sometime on Tuesday last week, and that freaked out investors along with the depositors and a lot of venture capitalists, including Peter Thiel, which is well known as multi-billionaire, announced in their messaging app Slack to get everybody out of the bank, basically trying to start a bank run, which definitely happened afterwards because of the panic. And because of that, $40 billion or 45, right, Huawei, was taken off the bank's deposits.
And it spread to Europe. The fear contagion spread to Europe. And they're experiencing the same thing in Europe.
Yeah.
Credit Suisse, for one.
Right. But yeah, during that time, like going back to Silicon Valley, by Tuesday, that was the bad news, sent the stock crashing, and by Thursday, they can no longer afford. They were trying to raise cash through JP Morgan. They were talking to JP Morgan and some of the big banks, but these big banks, they didn't want to, get involved with such a huge risk. So they didn't even pitch in. So the following day, Friday, the FDIC had to eventually step in and take over the bank. But the problem is, during that time, they can only insure those depositors that had $250,000 in their deposits, which is the standard. But the problem is, a lot of uninsured depositors, they have a lot of them because most of their clients are multi-billionaires, the ones responsible for, jacking up the real estate market. Actually, these are the guys who have their accounts in that bank. So over the weekend, the Treasury Secretary, Federal Reserve, and even Janet Yellen, not Janet Yellen, but the three of them, right? They posted a statement that the Federal Reserve was going to back up the bank and make whole of all the depositors. So imagine that. A lot of billionaires could have lost a lot of money at this point in time and made the ground level amongst us. But the government didn't do it. They ended up backing up the depositors, which I think it's fine. It's weird to suddenly see your billions and dollars wiped out and just looking at your statement landing on $250,000, wiping out all of your money in that bank in one short period of time. So that kind of like settled the things for the bank itself. Nonetheless, I think, like what we just said, it's the contagion is still spreading. Like as of this morning, we were actually talking about overnight. Another bank called First Republic Bank, also located in California, is struggling to find financing. But actually, in my research just this afternoon, it looked like JP Morgan already had agreed to lend them some money. So that kind of like established a base for the bank. It started the market. It started trading in the market down 20-something%, but it actually closed up 11, if I'm not mistaken, or 9.98%. This is after the fact that a lot of big banks actually backed up. Like they have sent at least $30 billion in deposits to First Republic. That way it could stabilize of what is it's encountering so far. So 11 banks. So looks like this is the beauty in capitalism, I guess. If anything, banks help each other to survive or to stave off bankruptcy and help prevent further contagion. Do you think this is a good thing, Huawei, or maybe this is just kicking the can down the road and eventually we're going to see more bankruptcies?
Well, I think with the banks doing the rescue, I think that's okay because they can come up with their specific transactions to do that. But if it's the government that's doing that, that's gonna cause what they call moral hazard, where is it kind of defeats capitalism because you're allowing a failure to persist. It's kind of like you're rewarding a failure. And this is what happened in 2008 when they rescued some of the big banks, but
Right.
Lehman Brothers was not rescued.
I think JP Morgan ended up rescuing Washington Mutual and Bear Stearns under the leadership of Jamie Dimon. That's how he earned his like white knight status during those dark days.
Yeah, and he's doing the same thing again with
Yep.
First Republic.
Yeah, he actually reached out to them over the weekend, gave them a backstop funding. Yeah.
Well, yeah, they gave them a backstop, so that's good. If it's like a fellow business helping each other out. But when the government steps in and try to bail out a bank or a company, then you have to question that.
Yeah. So in total, First Republic, for those who are still following, 34 billion in cash. And then another 30 billion is coming from the 11 banks, namely Bank of America, Citigroup, JP Morgan, Wells Fargo. It didn't say all the banks that are involved. Oh, Goldman Sachs, Morgan Stanley, Bank of New York Mellon, PNC Bank, State Street, Truist, and US Bank Corp. So that's about 64 billion in buying, or not buying power, but cash powder, I guess. It also has borrowed between 20 and $109 billion at an overnight rate from the Federal Reserve. And it also increases short-term borrowings from Federal Home Loan Bank by $10 billion. So this bank is rock solid. So looks like it has a lot of cash at this point in time, and they'll remain in business despite the long lines that we have been seeing in YouTube being uploaded. So not so bad, not so bad. As a result, I think that's one of the reasons why the market is up today. The fear and greed index. So just a couple of days ago, this was an extreme fear. Yesterday it was extreme fear, 19, but now it increased a little bit, heading on a little bit bullish up to the fear side of things. The market momentum. So we have seen this last week fall down the average, but since March 14, that's Wednesday, it has pierced through up again through this line and now has stayed up at S&P 500 at 3960, which is a good sign. We're back to bullishness again. Early bullish signs. The put and call options, a lot of people are still has expressed fear through their buying of put options, protecting them from any downside, any drop in the market. So now volatility has collapsed 12% today alone, and it's up 2.6% for the past 5 days. The S&P 500 is it's up nearly 2% today. Strong one, 3960, and it's actually up, believe it or not, for the past 5 days. It's up 1.21%, despite all the bankruptcies that just happened. That's incredible. Wow.
Now, if it was a larger bank, then there'll be more of a concern. Like if it's like Bank of America going bankrupt, then that's a big deal. That's a super big deal, right?
Yeah, Bank of America is actually one of the largest banks that have a large exposure to treasuries. They're saying it has about over $100 billion in negative held to market securities in terms of its investments, similar to the investments that SVB has held. But all of the banks have a certain exposure, but I think Bank of America has the largest. So it's one thing to keep an eye on. But the bank is, very liquid. It's a big bank. So we'll see. The volatility in the tech NASDAQ index, it's down 7% today, and it's up just 1% for the past week. And let's see how Nasdaq did for the past week.
Yes.
Oh my gosh, 3.46%.
Woo!
How in the world? I don't know. How in the world?
Shaking my head.
But
How
it's a
did that
positive.
happen?
Yeah, it's still positive. I guess that weekend deal with Jerome Powell and Janet Yellen, you know,
Mhm,
making whole of all those depositors really made a big dent in the market.
mhm,
And I think this kind of like supports our title. The QE has restarted. Because remember,
wow.
Jerome
Mhm,
Powell was saying that he wants to see some pain among
mhm,
peers, and not peers, but consumers, I guess, in terms of employment. But he basically saved everybody with what they did with the oh no, Silicon Valley Bank.
yes.
So
It brought the confidence back in, in the financial market.
right. And one thing to keep an eye on, this is the yield curve, the inversion. So we're still not out of the woods yet. We're still in a negative territory, but we're at
Mhm,
0.58 on the downside. But this is way higher than where we were prior to the bankruptcy, before the FDIC took measures. So just last Wednesday, we were down at negative 1.07. So we have skyrocketed actually for the
mhm,
past week. And I've
mhm.
seen an article, I think we haven't seen this since 1987. So definitely a spike
And
there,
hopefully it keeps going up for
which
our
just,
sake.
yeah, which just basically means that the long-term treasury would now be yielding. It's not yet at this point. I think we're still negative, but on a healthy market, usually the lower term or the shorter term should be yielding less, and the longer term should be yielding more,
Mhm.
which then helps stabilizes things. So right now there's still quite a push and pull, but still we're on a negative side. We're still inverted, guys, but a lot less compared to a week ago. So fund flows. So this is why we take a look at on a weekly basis. As of last week, March 10th, global equity funds draw first weekly inflow in 4 weeks. First, so yeah, if you've been listening to our previous episodes, I think for the past month, me and Wawi have been tinkering on our title, saying flows still going, more outflows, record outflows, further outflows ongoing.
Mhm.
But last week we actually saw inflows coming in. So this is interesting. This is before the sell-off. Well, not the sell-off, before the bankruptcies within the
Mhm.
past 6 days. So we have yet to see the updated fund flows data as of today or tomorrow, which Reuters usually comes out with. But yeah, this is despite the selling pressure on the Silicon Valley Bank on Friday. So it says here, European stocks attracted a net 4.76 billion inflows, while US and Asia were out of favor. 1.23 sell-off or selling in the US and 760 million in net disposal in Asia. So only Europe, actually, people dumping money in Europe because of the turmoil happening here in the US, which net it actually gave a good inflow. So for the sector, it was industrials and financials in Europe that receive a lot of money, 516 and 339, while healthcare sectors experienced 900 million in outflows, which kind of doesn't make sense to me. Because
Well,
yeah, go ahead.
so in Europe it was financials and what again?
Financials and industrials.
Financials and
I mean, this is
industrials.
globally.
Oh, okay. Inflow. Okay. Yeah, well, those sectors has generally performed well during early phase of the business cycle. So it's probably an indicator, you know, of what's coming.
Right.
Maybe we're coming out of this uh, recessionary, state.
Yeah. Has Jay Powell got tired already? Has he given up? Well, we'll see.
Is he going to blink?
Is he going to pause by next week? Speaking of, we have the CME Fed Watch tool shortly, so we can take a look. What are the predictions from the experts? So bond funds have been attracting a lot of money. For the 10th straight week, they received 5.72 billion in net. A lot of people putting their money in bond funds right now. That's pretty
Yeah.
interesting.
Hmm.
Also, the
So
money market. Yeah, money market inflows worth $15 billion.
that's
Second
a
straight
lot.
week. Yeah, second straight week.
That's a
So,
lot of dry powder.
yeah, exactly. Investors exited commodities,
Oh.
precious metals. And look at this. Data for emerging market funds showed equity funds secured a ninth weekly inflow worth $1.35 billion. So emerging market receiving a lot of love so far. So if you could tell,
Hmm.
start of the year, January and February, for emerging market equities, people are pouring money, nearly $5 billion each month or each week. And then in week into 2 billion, but still on the positive side. 2 billion here, 2.5, 1.5, 1.5. So people love the emerging markets.
Yes, yes. They're going, they're looking for more growth in that that sector, that emerging market sector.
Right. Oh well. So next, this is a CME Fed Watch tool. This is just going to indicate what the experts are thinking of where the Fed, or what's the Fed going to do on its March 22nd meeting. So right now we are at the 450, 475 basis points current. And 20% of the experts are saying currently that we're going to stick no rate increase.
Woo!
And for the rest, 79.7% of those who were surveyed thinks that we're going to be raising 25 to 50 basis points. So
Yeah, I kind of think the same way, between 25 to 50.
yeah, so it's going to be an interesting ride. We'll see. Market would be crazy if after we have seen, it's so incredible because for the past week I thought we've been selling off, but we haven't actually. I'm still stunned with what Nasdaq has performed so far.
Yes, yes.
Yeah.
Well, it's gonna be volatile until we find out what they're gonna do next. I think it's next week when they would determine, how much they're gonna raise the rates again.
Mhm.
And I
So
think anything lower than 50 will be welcomed by the market as good news, and make people risk more of their money in the stock market
mhm.
when that's the case.
Yeah, basically technology, especially the big tech, they have a lot of cash. Google has more than $100 billion in
Hmm.
cash. Apple, they know how to play with their money. And
Hmm.
Facebook as well. Now Facebook is actually cutting a lot of costs. Let's see its stock price. It just announced another cut, 10,000 cut, and
Yeah, 10,000 employees.
yeah, and the market loves it. The stock is up 13%. I guess this is one of the reasons why the Nasdaq is up. And Facebook is, bringing it along, pulling it up
Hmm.
on average. Because how big of a company is Facebook? It's $500 billion. 530 billion
Mhm.
of market capitalization. So wherever that goes, market follows, I guess.
The only large cap on the S&P 500 that's not moving is Amazon.
Oh yeah,
Hmm.
Amazon's been stuck in the 90s. Oh, it's actually $100 now. Pretty cool. It's up nearly 8%, Huawei. Not bad.
Yes, it's still undervalued.
$1
Uh,
trillion. Yep, it's still down nearly 20% for the past 6 months. We
hmm
still have yet to catch up. So
hmm
watch out. Might be a good indicator here that it passed $100. But it did also pass $100 about, wow, it has never been, well, since February. And then it crashed.
hmm Yeah,
It,
for a brief moment, it reached 100.
yeah.
But people are optimistic about this company right now,
Oh, yeah.
including our favorite Mr. Kramer.
Oh, oh no. Oh no. So
I
let's,
know we associate him with the opposite,
yep,
but he could be right this time around.
I don't know. I don't know. It might be a bad
Still
omen.
shaking your head on that, huh?
Yeah, I don't know. It's difficult to say. Oh well, so we have the next chart here. It's Bank of America Move Index, which actually, if we have the VIX for the S&P 500, we have the VXN for the Nasdaq, but this we have the Move for the. My dog started like coming up here, wanting his dinner. Hey Max, sorry about
Hello. He wants to find out what the move index is.
that. So for the Move, it monitors the volatility in the treasury market. So the higher this goes, actually, it's a predictor of where the smart money, or if the smart money thinks there's going to be a lot more instability in the bond market, which trades by the billions of dollars.
Mm.
So for the past 5 days, it's actually up. It's up 54%. So this is quite some issue. Well, actually, it could have reflected the sudden uptick in the yield curve inversion that we have just talked about. So
Hmm.
for the past month, it's up 54%. For the past 3 months, it's up 50%. So you could tell it's been close to its high, not even for the past year. It's in its highest in the past 5 years. So
Oh,
a little
wow.
bit interesting here. Actually, it doesn't go as high as back in 2009. So that's interesting. When did the market bottom last time? During the Great Recession. Let's take a look. If it's 2009 too. March 13, 2009. That's when the Great Bull Run started. Let's see. March. It actually went up higher. Oh, we just got a red flag here. It says we have 10 minutes remaining.
Oh, and we're still
So,
chart reviewing.
yep. So it bottomed back in March 2009 when the move index was way up there. So it's
Mm.
still, it could probably still be early to tell because we actually reached 200s of a point back during those days when Bear Stearns, Lehman Brothers was falling apart. So why this is another thing that we have included in today's episode, why we think QE has restarted. I bet you'd like this too, why we, because this is the assets of the Federal Reserve themselves. So this is coming from the Board of Governors. Total assets as of Wednesday, as of March 15th. So it's hard to tell
There. Oh.
for the past 5 years, but for the past year, we have been trimming it down since Jerome Powell started hiking rates back in March of last year. But take
Hmm.
a look at this.
Look at that spike.
From March 1 to March 8th, when was that? March 8th was sometime last week.
Hmm.
March 8th was Wednesday last week. So they started, actually the QE has relaunched as of Wednesday last week. Where is it? I can't move it because of this Zoom thing.
I can't believe
There.
they haven't discussed this in any news.
Right.
Uh, Look at
So
that.
that's a big spike. That's from what? 8 trillion,
Mm-hmm.
8.3 trillion to 8.6. So it's already $300 billion money printing at this
Yes.
time. 300 billion since last Wednesday.
Well, there we go. Starting a new business cycle.
So this isn't even it didn't even start. Well, I guess so, because this is data as of March 15th. So this is in conjunction with Jerome Powell and Treasury Secretary Janet Yellen announcing about supporting Silicon Valley Bank over the weekend. So would Jerome Powell try to erase this 300 billion spike here, or will we keep printing? Would this mark the bottom of the market, Maui? What do you think?
Well, this marks something.
For sure, yeah. $300 billion in
It
the course of a week.
We'll see. We'll see the trend. We'll see what the trend line is gonna do uh, in a few weeks. But
And
if that thing keeps going up, we're starting a new cycle.
it's a new cycle for sure if it goes up. So, what a timely tweet. Before he deleted it, Michael J. Berry tweeted yesterday morning. He said, in October 1907, Knickerbocker Trust failed due to risky bets, sparking a panic. Two others soon failed, and it spread. When the run began on a healthy trust, JP Morgan made a stand. 3 weeks later, the panic resolved and the markets bottomed. A stand was made this past weekend.
Yes.
So definitely take that into account if you're an investor and almost ready to sell out everything. And better watch out what the Federal Reserve is going to announce next week. If it's just 25 basis points, it could still mean something, but not as anymore, because now we just saw the $300 billion spike. So will it be enough to tame the bank run and still try to contain the inflation? Because we have delivered at least 0.4% last CPI reading, right, Huawei? And I think that projects into 6% on a
Yes.
yearly basis.
Yes. Still at 6%. So we're not quite at the 2% target, but things are moving fast right now.
It is, yeah. I've been keeping keeping a close ear on the ground for the past couple of days, like what you've been doing, Huawei, and it's easy and interesting at the same time to learn about new stuff. It never
I
ends.
would keep an eye on several sectors that usually will respond to an early cycle. That would be materials, real estate, information technology, financials, and the consumer discretionary sector. Usually those are sensitive to early phases.
Oh, yeah, good thing you mentioned that because I almost forgot about our weekly performance review. So for the past week, Nasdaq definitely carries the flag, and technology is up along with communication services, utilities, healthcare, consumer cyclical. While the worst performing ones, believe it or not, is energy, down 7%. Because I think oil is back down to levels even prior to the Russia-Ukraine war. It's selling less than $70 a barrel at this point in time. Financials as well, obviously, the sell-off, you can't avoid that. So since the start of the year, wow, technology, 15%, building up on gains, building up on gains. Let's see. Well, let's go back to the Nasdaq chart here for a second, year to date. It's up 12.8%. Believe it or not, it's up 12.8%. I just know that if it's higher lows, it means we're in an uptrend. We kind of broke that trend sometime last week when the panic about Silvergate Bank
Hmm.
or Valley Bank. But we're back in the uptrend, which
We
is
may
good.
be on to something here.
Yep, for sure. All right, well, before we end, do you have anything else to share to our listeners? Any quotes?
Yeah, well, just stick to your convictions, and like Warren Buffett says, stay within your circle of competence.
Exactly. Stay where you're comfortable with, invest your hard-earned money, make sure you keep an eye on it.
Hmm.
All right, guys, it was a good brief recording for this week. Thank you, Wowie, for joining us.
Thank you, Mark.
Appreciate it. And you guys have a good weekend ahead. Thank you, guys.
And don't forget to like and subscribe if you're watching this.
Thank you, guys. Like and subscribe. Again, this is Mark Hughes signing out.
Bobby Santos signing out.